What's going on, everybody? Good evening. Welcome in. Welcome in. What's going on, Spike? Al Brooks, good to see you. What's up, Husky? Mick Brotherson. I like that name. My channel is gone for now. That is correct. It still exists in the back end, but for now, I just really haven't been posting much in there. Maybe it'll come back one day, but for now, it just makes the most sense to just hide it, let everybody else shine. You got 1K in there, which is going to be able to hold it down just fine. But yes, for now, the tab is gone. Maybe it'll come back at some point, but unfortunately, that is the case. I mean, it really all comes down to, I've been inactive for it for over a month at this point. I just haven't been able to dedicate the time to it that I need to be able to, and that's a problem, right? So no point in having it there if it's quiet. Once things can kind of calm down for me in life, we could talk about bringing it back. But yeah, for now, no point to just have a tab there that's empty, quiet. How's everybody doing tonight, though? Hopefully, everybody's having a decent day so far. Good so far. Bad trading day. It's okay. Hopefully, you can let the not so good trading day be disconnected from the rest of your life. Good evening, Marina. Happy to hear that, Gary. We'll get started here in just a couple of minutes. Red to green yesterday and today. That's a good feeling, Al Brooks. Hopefully, it's for all the right reasons, though. Great to go red to green, but if you're making bad choices to make that happen, that was not as impressive. But I'm hoping that wasn't the case for you. All right, send out one more message letting everybody know. Oh, good. Keeping the losses small. Yeah, that is the key, Al Brooks. You know it. All right. Let me send this last message out. All right. Well, a couple minutes after the hour, so I don't want to keep wasting everybody's time waiting for everybody else to show up. So welcome in everybody for the evening. Yeah, been busy for me in my personal life, so I haven't been able to think of too many super creative topics. But Archon had the suggestion to bring things back to the basics here. So we're here with a good old support and resistance lecture. We'll try my best to put my own spin on it and not just go through the complete kind of copy and paste type of lecture that you would expect to hear from support and resistance, a concept that isn't too complicated. So yeah, we'll have a little bit of this lecture be on the PowerPoint and the majority of it be on the charts. Shay says, "Oh, you read the VPA book? Oh, nice. I'm happy to hear that. Very, very good. Very nice." All right. So this is a lecture that's part of the beginner course series typically. So I'm going to click through all the beginners course series stuff and just get right into the support and resistance. There's just a quick slide defining things for us here that I want to cover. So what is support and resistance? Support, generally speaking, is a level where buyers are prompted to purchase a security, and resistance is a level where sellers are prompted to sell a security. And just like typical my lectures, the definitions that I provide are usually about as vague as I can make them, only because support and resistance doesn't necessarily just apply to individual assets or single stock trades. But it could be an ETF that trades with support resistance, or a commodity that trades with support resistance, or even bonds that have key levels that end up being support resistance. So it really does apply to more than just stocks, and can be applied more broadly to just securities in general. So the question that I have on the bottom here is, why do they buy and sell, which is arguably the most important piece of understanding support and resistance and why it matters. This is something that we'll cover throughout the rest of the class, but in general, it's one thing to know that you could, maybe toss some lines or some trend lines on a chart, and be able to identify some reasonable places to take a buy or take a sell. What's more important, though, is understanding why those levels matter, because that's where your conviction should truly come from in terms of having the confidence to actually be able to structure a trade off of those levels. And that's really, that question is what we're going to focus on tonight. So that said, I have a couple examples just prepared on the PowerPoint here. Very, very simple, but still might provide a little bit of value to some of you with a bit more of a basic understanding. Essentially, here's kind of a very simple graphic of support resistance. The black line on the chart is going to be our price, and those blue lines are going to represent arbitrary levels of support and resistance. And what this graphic is representing is that, generally speaking, when price comes into support, that is an area where we typically expect buyers to begin showing a presence in that given stock by placing larger size buy orders, creating a move that gets the stock to move away from that support level in the upwards direction. Whereas a resistance level is a typical, or an area where we would typically expect sellers to step into the marketplace, begin placing that individual equity or asset for sale at that specific price level, which would typically result in a price moving lower from that level. So really high level definition there, but pretty simple, right? To shorten it and remove some of the complexity from that definition. Essentially, support is where we like to see a stock, or where we would expect to see a stock bounce. Resistance is where we would expect to see a stock reject. That's really pretty much it. The other thing that this graphic illustrates is it also shows that resistance can turn into support. So the terms resistance and support are essentially arbitrary. A resistance level also could be a level of support. And I think the most important thing to identify is that levels of resistance and support are simply just key levels. And the only way to really know or call them resistance and support is based on where price is trading relative to them. So for example, if we take a look at this level of resistance here in the center of the chart, this level is resistance as price trades below that level. But once we break above that level, that same level now becomes support. At the end of the day, it's still just a key level, or a pivot, or there's plenty of names that people like to call these sorts of key levels, but those are just a couple. Couple more graphics here. Again, these are pretty old examples, so I'm not going to spend too much time on them, but this is a similar idea to the previous image, just with some more real price action. You could see here, they're claiming this is some level of support right here. We break above that level, and then ends up turning again into resistance in the future. Same thing here, this level of support, number one here, turned into support early in this time frame, later turned to resistance here, here, and here. It's a big idea there. And then the other thing that I want to highlight is that support and resistance doesn't necessarily just need to be a horizontal price level. Rather, it could also be defined as a trend line. And there's a lot of things that people could call a level of support. Like, for example, a moving average could be considered a level of support or resistance. A Bollinger Band could be considered a level of support. For the purposes of this lecture, I'm really going to focus on just the horizontal levels of support resistance, just to keep the scope decently narrow, because if we open it up to everything, we could talk for hours on that. So that's really the big idea, the basics. I'm assuming a lot of you probably already know that, so that was probably nothing new. But any questions, comments, concerns on that before I keep going? I know Husky doesn't have any questions or comments. It is old news for you. Cool. All right, let's just move right over to the charts. We're not going to waste too much time here. So moving on to the charts, I think the most important thing to highlight is methods for finding these levels of support and resistance. And these are questions that people have all the time, kind of how to figure it out, if we're drawing our levels based on wicks or bodies. First off, I want to say, before I get into anything, very important for me to highlight, with any topic that we discuss about in these lectures, at the end of the day, the only way that you're truly going to get better at these technical analysis concepts is through practice, right? I could tell you how to do something 1,000 times over, but you're never going to actually end up getting it until you start to practice that same skill. So I want to just start out before I get into anything and highlight that, because ultimately, right, that's really how these concepts are going to become ingrained in your mind and really part of your routine. So just wanted to mention that. Okay, so starting off, in general, when starting to draw levels of support and resistance, it's always important to start from the higher timeframes. So right now we're looking at the weekly time frame on the S&P 500. What I like to do when first starting out, drawing these support resistance levels is I narrow my focus. So for me personally, I really only care about levels of support and resistance within about I'll say 10 to 20% range of the current price. Like for example, me personally, I'm not going to go start drawing levels down here, right? This doesn't really provide me much value. I don't really care to know if there's a level of support down at 475. If the price comes down to maybe 500, okay, maybe I'll start to expand my scope a little bit and look for some of these lower levels of support. For now, though, it doesn't matter to me, right? The S&P is at 560. I don't really care if there's support at 413.64, right? It just simply doesn't matter to me. So that's the first thing that I wanted to highlight, is that I'll typically start out by narrowing my scope to a specific range and price. Next up is I really want to highlight how significant support and resistance could be over the long term. And I want to just do that by showing AT&T, the monthly time frame. So for example, back in this area, we were coming into a big kind of area of support from over 20 years ago, right? And I'll just highlight this just by drawing a line really quick, just roughly right around there-ish. Oops, let me extend that to the left. So here we have this level of resistance, all-time highs from 1995 on AT&T, right here. And this level wouldn't have been as important to me if we didn't come back down to this area in late 2002, early 2003, and experience a really big bounce off of that level. Almost over 100% move after we tagged this level. Obviously, it took a couple years, right, because it's AT&T, but the stock appreciated 124% after it hit these lows the first time. And this first time it broke these lows, or broke this level of support, it rallied another 200%. So it's safe to assume that there is a significant amount of buying pressure in this area. And again, this was from over 20 years ago at the time. The first time I took this trade was late 2022. So this was not, anyway, I just wanted to highlight how far back you can go to really start to identify some of these longer term levels of support and resistance. Now, again, as a note, the only reason that I was looking, well, first of all, it's AT&T. It doesn't really go anywhere on the longer term, right? I mean, it's pretty much been in this range for the past 20 years, between 15 and 30. So it's good to have that context. But the reason that I zoomed out this far is partially because of that, right? Knowing the personality of this stock doesn't really go anywhere far. So I took the time to zoom out and determine what was going on near these levels when it was trading at about 16. So just a couple percent lower, which for AT&T, that's about 15, 10%. Noted that this area of support was present right around this 1450 area. And this was where I was able to structure a trade off of. So important to note that you could really go back far in time to find these key levels of support resistance. And just to dial in a little bit to see what this looked like on the weekly, this was the week I took the trade. It was like right here, literally, which ended up being the dead bottom, which was great. It would have been great if I held all the way, obviously, but of course it never goes that way. But anyway, just really shows the power of support and resistance. So as I was discussing, support and resistance, you should really start out on the higher time frames, and also do your best to focus what you're actually drawing levels on. Me personally, if I have all these lines on my chart, for everything that might not be as relevant, it's distracting to me and I just don't like it. But there's no reason for me to have levels down here. So personally, I'd rather just keep it simple, right? There's no um, real benefit. Does that make sense? Cool. All right. So moving on to actually getting down and drawing some of these levels with more seriousness. Once I've narrowed my focus and started on my higher time frames, I typically like to start out by marking the pivot points in a trend. And before I even show you on the chart what I mean by that, I want to just draw a simple just trend structure. We'll just go with that. Let's go even simpler to start. Let's just do this. Do something like cool. So what I first identify is the pivot points in the trend. So that would be here at this higher high, here at this higher low, here, 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 and here. And the reason that these are the first places my eyes are drawn to is because these are areas that are significant, I'll say, in the psychology of the market. For example, right? If a given individual, oh, wow, that was terrible. If a equity is able to make it through this level of resistance at this previous swing high here, essentially what that means is that this name is still in an uptrend. But if it breaks, say, this higher low here, and instead does something like this, that's significant because now this is an indication that the trend has begun to reverse, which is very important for a lot of types of trading, right? A lot of types of trend following strategies really depend on these pivots, right? These pivots in the trend. And I know this example is pretty, maybe not as clean as I hoped it turned out as, but let's just go and take a look at some more real examples. And I'll probably want to just zoom in on the daily here. So let's just draw a couple pivots in the trend here. I think the first one to identify is probably here, right? This is going to be our higher high. This is going to be our higher low. Another higher high here. Another higher high here. All-time highs here. Another higher low right around here. And I just threw those levels together in, I don't know, 10, 15 seconds. And you could already start to see that there's definitely some quality there. For example, I marked out this previous higher high here. Notice how this ended up being support once we broke above that level. And same thing with this higher high here. Notice how once we broke above that level, we got a nice continued rally to the upside. And I'll be the first to admit that this area of price action definitely was pretty messy. It's kind of gets to a point where since this was so news and event driven price action, to an extent, you kind of got to throw out a lot of technicals and just take a step back and wait for things to stabilize a bit. Now that we've definitely gotten to that period of stabilization, we can start to pay attention to some of our key levels a bit more. So, for example, if I was going to just draw some levels off of this prior kind of set of swing highs and swing lows, I would draw a level here, here. Those are probably the most important ones. So really, to me, these are the two most important pivots in the market right now. And if we take a look, we kind of simplify this structure. All this is a downtrend with a lower high. That's it. So this lower high, which was a previous area of resistance in the trend, now has turned into a level of support and is continuing to be significant. So in my opinion, right, if price is able to come back down to this area, it's probably a reasonable place to try along, right? If price comes back below or to that area and breaks below, might be a little bit more difficult, but starting to think about the short side wouldn't be a terrible idea. Now we have positively trending moving averages at this point, so the trend is certainly up. So you got to have that bias to the upside. However, still important things to consider. So that's really where I start to find out levels. Oh yeah, you like Yeah, and I guess that's one other thing that I've been doing more is instead of just having levels that go all the way across like this, I actually like having it not extend to the left so you can really see why you made that level in that specific location. Like if this went all the way across, it's not as clear to me why there's a level there. Like, okay, you have two pivots kind of here, but it doesn't really make as much sense right there. So yeah, I do like not having it extend to the left like that. So again, let's just go through and draw a couple levels based on the pivots in the trend. Yeah, so yeah, exactly. Why do I want to make levels here? It's a good question, right? So again, the reason that I want to mark levels in this specific location is because if we zoom out, this was the first lower high right here that we have set in almost a year, right? You look at the trend here, there really isn't a single significant lower high. Maybe that, but it's not really too big of a deal. Maybe that, but it doesn't have much volume to couple it there. For the most part, right, we didn't really put any significant lower high until here, right, which was very obvious. And I think this was something that we covered in some of the lectures a while ago, is that at this point in the trend, there's clearly something very different, right? We have two unfilled gaps to the downside, which ended up getting filled, but still two downside gaps opening up. You look back over this time frame, there was not any time where this sort of behavior happened, where we got two sequential gap downs within this short of a time frame. I mean, look for yourself, right? It just didn't happen. The last time we even got a gap down that strong, we were in a short-term downtrend, right? So that's the first thing, is very clearly the trend had reversed at this point in time. So as a result, the pivots in that trend should remain significant. The pivots being this first one here, which happens to be all-time highs, 560, 516, and this pivot here, which happens to be the most significant lower high in that time frame. Does that make sense how these two levels are arguably the most significant levels in the market right now, based on just this price action alone? Cool. And I forget who asked that question. Does that answer your question, iPhone? Cool. Okay, so again, it's all about kind of narrowing your focus, right? So that's really how I would come to these two specific levels. Very simple, right? It didn't take much for us to get there. The other thing that I'll do is sometimes I'll dial in these levels to be a bit more accurate. So you can see this level is based off all-time highs. All-time highs are 565.16. So I'll go in here and I'll just edit this to just be precise, right? So it's right at 565.16. Another thing I'll commonly do is label this level. So I'll give it a label ATH, like that. So it has a label there. And another thing that I'll sometimes do is give it a color. So I'll typically try and label my most significant levels in orange and less significant levels in white. And if it's something even less significant, I'll do white with the dash, is typically what I like to do. So these are really the two levels of support resistance to be paying attention to now. Now, if I went ahead and drew a couple more levels out, to me, this area right here seems to be significant, right? There's 4 wicks hitting effectively, well, really 5 wicks hitting this exact same level, which to me, it clearly indicates that there's some kind of interest here, which hopefully by now you're starting to get the idea, right? The reason that levels should be drawn at places is because of some kind of significance in the price action. You shouldn't just be closing your eyes, throwing a dart at the dartboard saying, yeah, I want to put a level right here. It's like, okay, well, why did you do that, right? You got to have some kind of reason. And you have to remember that buyers and sellers, the one thing that they can't hide, no matter who they are, is the price they traded at and the amount of volume they traded at those prices. So what we can do is we can use the charts as tools to understand where more trading activity took place, which with all these wicks off of this exact same area, which I'll just even move it down a little bit, right around that 547 area, clearly somebody was interested in trading at this area, right? 5 days in a row, we touched this exact same level. So very clearly, somebody likes trading S&P or the SPY at this level. And those are the types of things that we need to know, right? We need to know if we get short below this 555, we need to be aware that there's a lot of trading activity down at this 547.58 area. And it doesn't mean that we should sell our entire position and take all of our profits at that time, but rather we should be aware that we should be monitoring our position more carefully at this area, either taking a trim or making sure that we don't see those buyers step in at this area. Because remember, at this time, this was a level of resistance, but now that we're above it, this should turn into a level of support. So that's another example of a key level that I'd have here. And I would draw a level if a lot of bodies touched a similar area or a lot of wicks touch a similar area. In this case, we have 4 or 5 wicks touching the exact same spot. I mean, really 6 if you count this one, all within a 1 to 2 week time frame, right? So very clearly, there's some significance with this price. Does that make sense? Yeah, Gail, that's a good question. So what I mean by that and why that matters, again, as traders and as traders who are paying attention to price charts, right, is our responsibility to look at this chart and understand where more trading activity happens and understand where less trading activity happens. And the reason behind that is because those are the areas where we either want to start a position or begin closing a position, because we want to be on the right side of the market at the right time. And as far as we understand, right, we can't time the market based on a specific time of day. But what we can do is look at these levels as a reference, almost as like a guidepost, right? We know the last time price was around this 547.50 area, there was clearly large amounts of money put forth in use to trade, buy or sell this given equity around this area, which is denoted by the amount of wicks tagging the exact same area. So the moral of the story really is looking for a large amount of either bodies or wicks in a similar area. So another example of that would be this, right? We have 1, 2, 3, 4 wicks touching the exact same area, and a lot of them also on high volume, right? Which, if you think back to our VPA course, you know that helps it even more, right? Boom, boom, 2 days on elevated volume as we tag this level, right? Let's just go find another one, maybe some more bodies to make that a bit cleaner. Something like this, right? Clearly, multiple days trying to get over this level, and ultimately we were unable to, right? This was where sellers ultimately regained control. So you should definitely be sure that once we close above this level, hold above it the next day, then gap far above it the day after, that's probably a big deal, right? So the moral of the story is that support and resistance needs to be quality so that you can use it with conviction in your trading. So we know when we break over a massively important level of resistance, such as this one, right? Again, we know it's massively important because we have 1, 2, 3, 4 wicks and bodies touching it. We got a massive downtrend, a 7% drop in price in 10 trading days, that's 2 weeks, on elevated volume. We know that this was where sellers once again took control. So we know the next time we go to this level, there should be more sellers stepping into the marketplace. And lo and behold, the next time we came to that level, sellers did try to step into the marketplace, right? We can see that here, and we could have gotten faked out on that. However, we have to be agile. And on the very next day, we close above this level with a bull bar closing near its high on elevated volume. Then we consolidate above this level the next day. So if you didn't get long here, that's fine, right? Here, we gap up above that level, again on elevated volume. Never fill that gap. At this point, the moving averages are trending fully positively. So you know that there is absolutely zero reason to be short. We've made it above a massive level of resistance. We broke that level of resistance on elevated volume. Then we gapped up, held that gap up. Now you should be looking to your next level of resistance, which is this one, right? That next pivot in the trend, which actually is a bit lower. That next pivot in the trend, right? Which ended up being right here. We break above that, consolidate above it, move higher, right? Which you can monitor based on these swing highs here, right? Look for once we break above these swing highs, that's when you can get long. And again, all I'm doing here, I'm really finding support resistance levels in two ways, right? The first way is marking off these pivots in trend. Again, these are our lower highs, lower lows, right? So you could mark a level here, here, and here, right? All pivots in the trend, all important. The other way we're getting levels is areas where price consolidates or tags multiple times in a day, which coincidentally, they typically happen around the same area, right? It's just how it works. So for example, this was that lower high, but we also have that consolidation at that level as well. This was a prior pivot and trend. We get consolidation right above it. Does that make sense? Cool. All right. So going back to this example, I want to highlight one more method for finding key levels. Well, actually a couple. So we talked about pivots and trend, right? That's number one. We talked about areas of consolidation, something like that. That's number two. And I'm just going to mark these off. One, come on, two. The last area to be monitoring for support resistance is gaps. Gaps up and gaps down. There's all of our gaps. In the short term, I'll just mark all the gaps. Here, here. Here's all of our open gaps in this area. Well, this isn't actually the last method, but I'm just going to mark it off as 3. There's one more that I want to talk about after this. 3. Let's zoom into a shorter time frame chart. Let's go to the 15-minute over the last, 30 days, and let's turn pre-market back on. Okay, so scrolling back, we created this gap down here. Well, let me pull up the daily so we have that frame of reference so you don't have to be imagining, you're just listening to what I say. Let's go here. Okay. Okay, so we're looking at this first gap right here, right? So this is that first gap. Check this out. What's going on here? Do we think this is a coincidence? That we just happen to find resistance at the bottom of the gap one day? We just happen to find resistance at the top of the gap the next day and the bottom of the gap? It's not a coincidence, right? Not a coincidence. One thing to note is that the market and technical analysis in general is definitely more of an art than a science, right? You'll notice we had this level, which we thought was right at 460.54, and I made this pretty rough, so it could be a bit higher, a bit lower than that. And we actually moved above that just by a little bit, right? Just by a little bit, a couple, 30 cents, right? One thing that I was told a long, long time ago when I was learning support resistance and trying to understand this discrepancy is that when trading support and resistance, sometimes it's best to squint. And what that means is the area where price is actually going to reverse might be just a bit different than what you have drawn, right? Remember that just because you have a level of support or resistance drawn somewhere doesn't mean that the market is going to stop firing on all cylinders and form a U-turn right where you decided to draw your line, right? It's not how this works, right? Sometimes you're going to be really accurate, right? You're going to be dead accurate, like something like this, right? Dead accurate. Other times, you're going to be a little off, right? And that's the reality. There's always going to be times where we overrun support, overrun resistance, and that's just part of the game, right? That's just really how it goes. And you have to be able to accept that and either define your stop loss in a way where you could deal with that, or define your trading strategy in a way you could deal with that. So for example, if you're getting short at a resistance level or getting long at a level of support, there's 2 ways you could deal with action like this. Either you could stop out on the close above, but be ready to re-enter when we move back below, or define your stop in a way that gives you a little bit of room. So for example, if you think you're going short at a really strong resistance level, but want to give it some room, maybe you could define your stop at the next level of resistance, which in this case would probably be the top of the gap. Couple ways to think about it, right? In order to do that, you got to define your profit target in a way that makes sense, right? You want to at least, at minimum, be able to make the amount of money that you can lose, and that's on the low end, right? Ideally, you want to make at least 1.5 that, but that's another discussion. Anyway, that is the third way of finding support and resistance, and hopefully this just helps illustrate kind of the power of that, right? Again, now we're seeing some of our levels come into play, right? This is what this looks like on the 15-minute when we're trading near some levels of support and resistance. I mean, again, right? So, and even after the gaps are filled, right, they don't go away. Look at how this still remained significant, right? Multiple days in a row, this 562 area continues to be significant. That's method number 4. Or, God, I can't count. Method number 3. Does that make sense? Oh, Gail. Such a bad question. Just kidding. Every gap does not have to be filled. And I think it's important to note, there is absolutely no mandate that anything ever needs to happen in the market. And I want to just show you an example. This is 1937. We're looking at 1943. And what I'm going to do is I'm going to find an open gap somewhere. Well, let's go to the weekly because there's going to be a gap on the weekly probably. Essentially, the answer to your question, Gail, is no, right? It's never mandatory for a gap to be filled at any point. Actually, I'll probably be able to find one down here from 09. Let me do that really quick. But I forget where I found the gap. I did this exercise a long time ago in some lecture, and I pretty much found a gap from like 1937 that was still open. And I was like, oh, you're going to go back and fill that? Okay, I mean, here's a recent one, right? Here's a gap at 2,500 SPX, right? Couple gaps down here. Are we ever going to fill these? Probably. Probably something's going to happen at some point where the market moves, I don't know, significantly lower again. I don't know. Who knows? But here's 2 open gaps right here. Scroll to the right. I don't see them. They didn't get filled, right? Going even longer back. Let me just try and get to 2008 really quick if I can. So that's going to be good. Can't even tell where we are. I don't know what year this is. Okay, we're in 2008. Oh, wow. There's actually no gaps here. Much less gaps. Anyway, Gail, hopefully this answers your question. It's a no, right? Anything, there's no reason. Okay, here you go. Here's a gap. That's a tiny one. Look at that. From 1998. I'll just mark that really quick and see if we ever hit that. Oh, we did. Okay, we filled that one. That's good. Anyway, yeah, hopefully that answers your question, Gail. And I was just kidding when I said it was a bad question. It was just funny. Okay. So that is the third way to look for levels of support resistance. The last thing that I want to talk about tonight is essentially not like any other concepts that we've talked about already. And it might be something that you've heard before, it might not. But just to introduce, before I preface, I'm making it seem like it's a lot more exciting than it is. It really isn't. The short answer is it's psychological levels, right? It's all about looking at levels of round numbers. So, for example, me personally, when I'm trading, I have SPX down here in the corner, and I have every level 5,600, well, not 5,700, but 5,600, 5,500, 5,400, 5,300, all marked. And let's just take a look at that chart really quick. Let's just look at the hourly, or let's look at 30-minute. We'll look at the hourly so we can see a bit more. So check this out. It's not perfect, right? But here's 5,400 support, 5,500 support, 5,300 support, 5,200 support, 5,300 resistance, resistance, resistance. I mean, you could really do a lot just using the SPX and round numbers on the SPX, 5,500, 5,550, 5,600. Pretty simple, right? So that's another topic or way to find support and resistance. That's probably the simplest one. Yeah, does that make sense, everybody? That's really all the methods. From here, we'll just go through. I'll probably just take a couple random charts so you know I didn't prepare, and we'll just talk through making some levels. I'll talk through what I'm thinking when I'm making the levels, and that'll be how we wrap up the lecture. AV go. All right, Norman. God, you do not wait, but at least this stock's a little bit more normal. Okay, so let's start from a clean chart. So this clean and clear this up. So right away, right, I'm going to go ahead and mark our all-time high. We're close to this all-time high area, so I'm going to go ahead and mark it very clearly, right? We have a downtrend here. I'm going to go ahead and mark those pivot points from this downtrend. Here looks important. Somewhere around here looks important, but it's a little bit jumbled from this pivot point. So I'm actually probably just going to go right here for now, that 160 area. This level I already had before, so it's kind of cheating. But somewhere around here is definitely important. I'm probably going to go with this. So this one's a little bit of a hard one, right? I mean, pretty much you wouldn't be wrong making some kind of level anywhere in that zone, which brings us to a whole other topic that I don't want to cover right now. But I might just make two levels. So here at the top of kind of all those wicks and at the bottom closer to these bodies in the lower end of this range. Oh, Siri, this is an interesting question that I want to address. I don't, or you said, so I don't make any levels on the lower time frames like the 1 hour. So I didn't show you myself doing that, but there definitely is a time and place for doing that. Me personally, I'm more of a swing trader, so I'm most concerned about what's going on the daily, weekly time frames. However, definitely nothing wrong with going in and zooming in on the 1 hour if you're looking at something a bit shorter term, or if you're looking into something for like a day trade, right? Not a damn thing wrong with drawing levels on the 1 hour. And that's something that I failed to know at the beginning of these class. But this concept and everything that we've talked about so far today truly does apply. And I guess I probably sound like a broken record at this point, but all the concepts that we talked about in this lecture truly do apply to any equity on any time frame. The most important thing to identify is that the higher time frames are always going to be more significant than the lower time frames. All right, so AV go. This is probably what I get. It's a bit more difficult, Norman, because this one's got some more volatility. But what I'm going to do is just check this on the hourly and see how we're looking. Okay, so as for the short-term range, it looks like I got it right. This seems to be a failed breakout above this 168 level. So I like this 168 level. I also like this 160 level, especially because we extend that to the left just for visualization purposes. We have that nice pivot at 160 as well. So what I might even do is just take the fractional nature of that and just make it 160 even. So 160 definitely matters. The next level really, I mean, is going to be this pivot from today's low. And if you look all the way to the left, you can see we also have a pivot off the same level just at the edge of the chart here. I mean, it's a minor one, but it's something. So this is probably what I'll be watching here in the short term, Norvin. Yeah, in terms of how it looks, kind of interesting. The structure is for sure questionable. However, holding the moving averages, which is good. Like you said, NVIDIA's got earnings coming on Thursday, I believe. Also, AVGO has earnings in just a couple of weeks. The trend in the short term is positive, right? And it's good to see it reclaim this level, this 160 area, right? Decent prior pivot here and here. However, right, this candle is not super beautiful from a volume price analysis perspective, right? We have a massive bearish engulfing on elevated volume. From a volume price analysis perspective, it's a decent reason to stay away from this one. Yeah, so this isn't something that I would personally probably trade right now. But I mean, even if we draw this trend, it looks good for other reasons, honestly. We just really need to see that buying volume I think you could try getting long off this 160 area. Yeah, I don't hate it, I guess, now that I just drew that trend and I can see that. EMAs are positive. We got this nice trend that we're holding above now. If you wanted to get long on it above 160, I don't hate that actually at all. I'd definitely be cautious as we approach this 168 level, right? Definitely a significant amount of sellers here. And that would be how I would define a trade, right? So essentially, my whole trade plan would be defined off of these kind of near term or close levels of support resistance, with 160 likely being the area I enter. This 156 area could easily be a stop loss, maybe not, but definitely would be a solid stop, right? A close below this daily low definitely would indicate not only a loss of this trend, but a loss of the EMAs. So I would probably want to get long at 160, stop out below 156 with my first major target at 168, which actually gives us a really good risk to reward ratio. That gives us 2-to-1 risk to reward. So yeah, that'd probably be the first place I trim at 168. Next place I trim would be the swing high around 172.50. And then, I mean, if we really keep going, the next level that I'd be paying attention to is 176.50 there. Norman says, if it becomes a ripper to 172, what would happen? Well, it would go to 172. I don't know. That's what would happen. Yeah, actually, Norman, I hate this a little bit less than when I first started looking at it. I actually think it looks kind of decent. Let's just check the volume profile really quick. Okay, the volume profile helps a lot too. So, I mean, for those who are in the VPA class, this is a really nice sign, right? Massive volume shelf that it opened below today and actually closed above. That's a big deal to have that nice amount of support right below current price. It also gives us another very damn good reason to keep the stop tight. We got a huge volume gap below. So, I mean, realistically, we lose today's lows. There's not much stopping it from 150. If we lose 150, there's not much stopping it from 144. But I actually don't hate this, Norman. I like it more, much more than when I first looked at it. The only problem with AVGO is the liquidity on the contracts is pretty poor for the most part. All right, we got. Marina says, "Is there a difference between support resistance versus supply and demand?" Oh, Marina, you're opening up a can of worms. Just kidding. So I'll say support and resistance and supply and demand, they're all vaguely the same idea, right? Support being an area, or support and supply being areas, or wait, support and demand being areas where we typically see buyers, and resistance and supply being areas where we typically see sellers. The big difference with supply and demand is typically those are drawn as boxes or zones as opposed to lines. To each their own, really. At the end of the day, the concept is really the same. It's just a matter of how you implement it. But at its core, right, you're identifying places where there's buyers and sellers. You're just doing it a slightly different way. Using supply and demand gives you a bit more, I'll just say, margin of error, right? It's easier, or you have more room to be a bit inaccurate with supply and demand because you have such a wide range where if you're a couple cents off, it matters a bit less. But anyway, hopefully that answers your question. Albrook says, when I look at the volume profile for support and resistance, do I mark the peak of the iceberg, or do I mark the shelf where the volume dies off after? Yeah, typically, Albrooks, I mark what you call the peak of the iceberg. So in this specific example, it might cause me to revise the support level up from 160 to right around 160.85, just based on this volume profile, right? I would also typically have some kind of level where what you call the iceberg really drops off, which would be right around here, which I have my stop at day's lows, which I think makes more sense at day's lows than here. But anyway, that's the answer is yes, Albrooks. TLS study for pivot points. Yeah, that sounds cool. What time frame would I draw support and resistance for day trades? 4 hour, 2 hour, 1 hour? Yeah, Mike. So very interesting question. I'll say, first of all, when day trading, right, you can't just throw the daily and weekly timeframes out of the window, right? Just because you're trading on the shorter timeframes doesn't mean that the higher timeframes no longer matter. And just to be clear, right, those levels that you find on the higher timeframes are still significant on all timeframes, right? Those are still going to be the most important levels on the 5-minute, on the 15-minute, on the whatever time frame, so long as they come from those higher time frames still. Now, that said, right, if you go chart all your levels out on the daily and on the weekly timeframes, and you're not able to find too many levels that are near current price, that's when I would typically start to zoom in a bit to things like the hourly. And even as a day trader, right, you're going to want to have a bit tighter profit targets, a bit tighter stop losses, because you're not going to be able to expect a 10-point swing every day on the S&P. You're going to need to have a bit tighter of a range, which you're going to have to get from the hourly. So I would say the workflow is still the same, right? You still should start from those higher time frames. However, me personally, the time frames that I would use for the daily and the weekly, typically it's the 1 hour and the 30-minute would be about the lowest I would go. I'd consider using the 4 hour as well. But yeah, that would be my answer to the question. Hopefully that helps. Okay. Somebody said IWM earlier, which I actually want to take a look at. Yeah, Gary says IWM and AMD. We'll look at AMD just very quickly, just because I'm kind of curious how it goes today. Okay, yeah, AMD is a little less exciting. Let's talk about IWM. So IWM, you can see I have a lot of my levels kind of already labeled. Let me just clean this up a little bit. So I'll just kind of talk through them. Let's just go to the weekly here. You should be able to generally see how it came to all these levels, right? Here, lower high pivot in the trend. Here, pivot in the trend, hit it twice. Here, pivot in the trend, right? This is a lower high. Here, same thing, right? Look on the daily, how that's been behaving pretty nicely, right? So these are levels from the weekly. Again, right, on the daily, it's not going to be perfect. We're not always going to just reverse instantly right at those levels. If I was going to draw a couple more levels, definitely something right around here. Probably would need to go to the hourly to fine tune that a little bit. Definitely something right around here, right? Clearly some interest around here. And then also definitely something here, these previous 52-week highs. That's pretty much it. IWM looks nice though. Definitely starting to really show some recovery and some optimism for the coming rate cuts. Okay, yeah, Gail, can I chart your fave ARM? Yeah, just because you had really good questions, let's take a look at Gail's fave ARM. So yeah, I still have some levels around this current area. I'll just go ahead and clean them all up, so I'm sure they could be refreshed. This is from an old trade idea. Let's just clean this all up and talk through this. Okay, ARM. In terms of levels of resistance, well, we got a nice gap right here that we filled. Definitely still important though. So let's go ahead and mark that out. Pivots in the trend, honestly, really difficult to see and hear. There's probably a pivot here, probably a pivot here, but I probably need to zoom into the hourly just to see it a bit more clearly. Here, definitely a level of support. Probably something somewhere around here, but a bit messy. Let's see. Probably something around there, right, from this part of the trend. This is one that actually, since the trend has been so aggressive to the upside and the downside recently, there's not much that I can really do with this on the daily, right? Especially as it relates to the current price action. Like there's really not much support or resistance on either of these trends. Here, pretty clear level of support right around there. And also some kind of level of resistance, it looks like right about there as well, which lines up with our current price. And then just zooming it a bit on the hourly to see how this all lines up. Yep, so that looks pretty good. Just extend that a bit so we could really see where that comes from. That looks pretty good there. Maybe could just add, I don't know. I mean, this is mostly just a range. I'm contemplating considering adding some level right here, but for the most part, I think I'm happy with this. This is really just a range on ARM, right? So in terms of trading ranges, right, you want to be long at the bottom of the range, long on a break of the range, short at the top of the range, and short on a break of the range outside. ARM though, as a whole, definitely isn't my favorite trader. It's just so difficult with the liquidity on options isn't amazing, and it's just not something that really behaves in ways that interest me. It's just super volatile for no reason. I mean, it must be related to the valuation isn't helping it. But it's just not my favorite. There was a time back here when I was really interested in trading it. Never traded it, and kind of ever since then I gave up on it. So I'm sorry, Gail. Not my favorite, but I'm happy you like it. If I was trading it, I would probably want to get long at 126. I'd probably want to get long above 136. I'd probably want to get short if we reject 136, and I'd probably want to get short if we break 126. But outside of that, obviously I'd look into it more than just that. But yeah, that's a big idea. Yeah, It is kind of a weird one, isn't it? It's definitely different. Okay, Albrook says Rivian. Yeah, I only want to pull up Rivian just because I saw a chart on that earlier today. And actually, I hate to say it, but it kind of does look like not horrible. The weekly looks like pretty bad. Um, there's no way around that. Daily, though, I mean, look at the levels that I already have, right? I mean, this is levels that I came into this lecture with. I didn't chart them live. And hopefully it's very clear why there's a level here, very clear why there's a level here. It should be reasonably clear why there's a level here, right? Again, this area is a bit messier, a lot of wicks and jumbling around that level, but still pretty much prior all-time highs or 52-week highs. Here, very clear pivot in the trend. Here, very clear area of consolidation / pivot in the trend. What I do now is probably add this level of support right around here, which I would actually probably revise down just a bit based on the current price action. I would get rid of that trend because that's useless and probably redraw the trend. It looks something like that potentially. And then I would add another level of resistance somewhere around here, but I really need to zoom into the hourly to figure out exactly where that's supposed to go. Okay, and that looks good. So I'll just have that level of resistance be right around those prior highs, which I'll just do off those bodies instead of that wick, because we have those two bodies right off that same spot. It seems a bit more precise. And then even here, I'd probably add another level right there at 1450. And then what I would do, since I just added both of these on the hourly or added this one on the hourly, is I just make that dashed. So taking a look at how that looks on the daily now, we have a rough little trade plan that we could do, right? We would probably want to stop out at day's lows. This would be our first target. We probably want to enter above 1449. Anyway, I'm just rattling things off at this point. But yeah, Rivian looks kind of interesting. Buy volume's decent as of late. But yeah, it's just a terrible stock. I just don't trade these types of companies anymore. I really have given up on them. Yeah, I gave up. Okay. Norman says MSTR. This is probably the last one we'll look at, Norman. MSTR, just to end it off with something. Actually, I want to look at SMCI because that one's really interesting. That one got that short report that came out today. So there actually could be an opportunity here potentially. So let's just clear this out, start from scratch here. Again, weekly here, this is similar to what we saw in ARM, where through this prior area, really not much support, right? Just this pretty much straight vertical trend. And here, right, probably the first level I'm going to draw is right here, this lower high on the weekly. That's about it. I could draw a level right there now, which I will, but that'll probably need to be tuned in here on the daily. Okay, and those two levels definitely are significant. I would also add this gap in right here. There we go. And then I guess this level's fine. It's from the weekly, but honestly, I prefer to just make it 500 because that's just a key psychological number that's so close. And then also anything from the past history that matters to us here. Maybe this 458 area looks like decent, but again, it's not a very strong support. Obviously, if we came down to here, right, that would be significant. Or let me redraw that a little bit. Obviously, if we came down to here, this would be significant, but I think that's a bit far away from current price to give too much weight to. Next pivot to the upside above that gap is going to be 725. Something like SMCI, you got the 500, 600, 700, all to be watching out for as well, but I'm not going to draw all that out. But that's probably how I would do that for SMCI. I probably also would draw this trend at this point. Probably would also pull up the moving averages and realize that we're in a full downtrend, so really no reason to be long right now until we get above that 631 anyway. Yeah. Oh, very interesting, Gail. My favorites to trade. I haven't traded T in a while, honestly. I really can't consider it one of my favorites to trade. Definitely River owns AT&T in terms of it being his baby. Me, I really like Amazon. That's one that I really do enjoy trading. It always kind of agrees with how I like to trade. I used to like Rivian a lot. That used to be one of my favorite small caps, but then I quit small caps, never to return. I like QQQ a lot. Love how that one moves. NVIDIA, do my best to trade that, but haven't really been touching it too much frequently. I think the last one on my list probably would be Google. It's going to be my last one. Those are, and generally speaking, I like to trade mega cap tech. Is typically what I like to trade. I'll diverge away from that as needed, but I just don't find as much comfort in other sectors, I feel. So, yeah. All right, everybody. Well, that's really going to do it for tonight. Again, as always, really appreciate you guys all being here. Hope you guys enjoyed and hope you guys felt like we put a little bit of a different spin on the typical sport and resistance lecture. That's it. We'll see you guys all next week. I'm still trying to figure out, we're thinking of doing another course, but it might go back to the beginners course series. So we'll see. We're still kind of evaluating that, but I do want to get into another course series. It's just a matter of what, if we do a new one, if we go back to the beginners course series. Anyway, so you guys, I'm sure, will be in the loop on that once those start to get scheduled. But again, thanks so much for being here. Hope you guys have a great rest of your evening, and I'll see you guys all in the next one. Have a great night, everybody. See ya.